There's still a little bit of uncertainty lingering in the air, but for the most part, the promise of low rates is bringing some positivity back into the real estate market here in Victoria, BC. So is now the time to buy? Is there a looming crash coming? What am I sensing on the ground and what am I expecting over the next few months? We're going to cover that in this video. Let's get into it. As you can see, toque season is upon us. The days are definitely getting shorter and it's feeling like the fall out there. It's also felt like the fall market in stretches. There's definitely been more agents in the office than there were through the summer doldrums. And over the last few weeks, I've started getting more calls and inquiries myself, and there seem to be more conversations happening, whether it's people planning to move this year or next. The conversation is shifting, and that's starting to show up in the data. Let's talk about it. In my view, the market is starting to tell us through some distinct signals that things are starting to shift and change. Now, markets don't change direction all at once, and I often refer to it like a cruise ship changing direction. It does take some time, but over a few months, you do start to change direction because demand, momentum, and excitement about real estate start to build. Because of that, I've started to notice a few things through September and October that start to map to a certain set of themes. There were 1,441 new listings in September, and it was the second greatest flood of new listings in a September since 1990, only bested by 2008. Sales in September also picked up from the last 2 years, with 573 sales in the month compared to 497 last year and 425 in 22. Overall, my view is that there was a little bit more optimism and hope in conversation with sellers than there was actual real world demand and the amount of buyers that were willing to show up. The segment that actually appeared to fare the worst in September was detached properties, which is not the norm here in Victoria, with the median sale price falling to the second lowest level of the year at $1,110,000. The volume of options in this category relative to the total sales volume is putting some downward pressure on prices, but I didn't expect it to last then, and we're starting to see that play out now. To zoom in for a second, total active listings relative to unit sales isn't always the most indicative of what's actually happening on the ground, and I started to see a few other themes play out specifically in detached, and to the midway point of October, a quarter of the sales listed below 1.5 were actually above asking, and in the same respect, a third of sales for properties listed above 2 million were also at or above the listed price. Attractively priced properties, even in the luxury segment, are starting to see a little bit more demand and attention and even competitive offers in some scenarios. Now over to October, where we saw a similar trend in new listings play out. There were 1,204 new properties listed for sale in October, which is the most we've seen ever since the Victoria Real Estate Board started keeping tabs on that data. The 5-year average for new listings in October is actually down to 1,008, but seasonally, we're used to seeing activity start to slow as we start to transition from September, October, and into the winter months as the holidays approach. One of the distinctions from September is that in October there were 654 unit sales, which is actually bang on our 5-year average, but well above unit sales in the last 2 Octobers where we had anemic fall markets in 2022 and 2023. It's also worth noting that that 5-year average at 654 is actually supported by pretty strong years in 2020 and 2021. And I think this is a really good signal that the market is starting to gain a little bit of momentum. Outside of those 2 crazed pandemic years, it's actually the strongest October since 2017. And as I expected, the detached median bounced back from September, which was a little bit of a blip in my opinion. With a little under 3,200 active listings at the end of October, we're starting to see a compression happen between sales and active listings that's leading to more balanced market conditions than what we saw in October. I expect that this trend will continue as we move through these historically less active months through the winter season. Over the last 2 years, we haven't breached 400 sales in November or December, but if I was a betting man, I think that could change this year. Interest rates, consumer confidence, and certainty remain the variables at play over the next 60 days. And there's a few things to take a look at as we start to project into 2025. The economic and inflation data is continuing to support lower rates from the Bank of Canada, who has another meeting on December 11th, which is the last meeting for this year. Inflation fell to 1.6% in September, on the lower side of the central bank's target range, and we also saw a release from Stats Canada estimating 1% GDP for the third quarter of 2024. This stands in contrast to the Bank of Canada, who predicted a growth rate of 1.5% in its latest monetary policy report. Some economists are pointing to some momentum building in September as a positive step for the economy, while others are flagging the downside risks and that lagging effect of fiscal policy. There's still a lot of uncertainty and opinion out there, but on the whole, to zoom out, I think most people believe the Bank of Canada has a few more steps to take on the road to normalizing rates. Although there has been a little relief for variable rate mortgage holders as the prime rate's been reduced over the last few months, it hasn't been as positive in fixed mortgage land, with the 5-year Government of Canada bond yield pushing from 2.6 in mid-September to north of 3% at present. This is probably another video to unpack some of the forces that are playing out in fixed income, more specifically on the US Treasury side. And if you have questions about that, feel free to reach out to me. Near term, I think it's reasonable to expect that we've reached the bottom of fixed rates, but this is likely to change as we move into early 2025, which brings up a few things that you should be following closely if you're in the market or considering jumping in over the next few months. The first of those things is this: if you're a macro geek like me, watch those bond yields, economic inflation data, especially in the wake of this coming US election, or just subscribe to this channel because I'll be making more routine updates in that kind of space as it relates to mortgage rates, which have a huge impact on the velocity and trajectory of our market here in Victoria. The second piece of that, which is somewhat related to the first, is keep an eye on what happens with inventory levels, especially as we cross into early 2025. One of these things that I've seen play out a couple times, especially in the fall, is that sellers have been on the sidelines and they've hoped with some optimism that a stronger market would return through the fall. That's why you had that huge flood of new listing inventory in September and October. And there will be many conversations happening over the next few months with sellers that have not sold this fall market thinking, when's the best time to try again? I would expect that many of them will be looking into early 2025 and the spring market of 2025. And even if there's further downward pressure on rates that stokes demand, we could probably see the actual impact of that muted by a rise in inventory as we get into March and April of next year. For now, I'll keep you informed with what's going on in the Victoria, BC real estate market. Don't hesitate to reach out with any of your questions.